Our next guest is no stranger to M&A intrigue in the streaming space, and he says investors should pump the brakes on any speculation on a deal for Netflix. Let's bring in Lightshed Partners co-founder Rich Greenfield. Rich, why is that bunk?
Well, I mean, look, I guess anything is possible. I would never say never. I mean, I don't think if we were sitting here a few years ago, none of us, I assume, would have believed that Discovery would sort of consume Warner Media. So sort of anything is ultimately possible. But I think with Netflix, the thing to keep in mind is there's only a few companies large enough that probably could digest it. I heard you just mention, or heard Julia obviously mention, Comcast as a potential buyer. That's a very challenging legal transaction. Remember, Comcast got into quite a bit of trouble surrounding the Hulu partnership years ago when they were trying to buy Time Warner Cable. Government's got a long memory. I think it would be very hard, given sort of the vertical integration of Comcast, distribution, meaning the cable business, broadband business, combined with the content business, to also own the world's largest streaming platform. I just don't see that passing muster. Now, Disney is an interesting one. If Disney turned around and sold Hulu to Comcast, we've actually talked about the fact that that would be sort of a really bold, transformative move for Chapek, who's definitely looking to figure out what defines the Chapek era. And if you think about Bob Iger, who I heard Julie just mention, no stranger to Sun Valley, he came into being, CEO of Disney. And what did he do? He made a major acquisition of Pixar that really set the tone for his career at Disney as CEO. I think we're looking for what will define the Chapek era. I doubt it's a Netflix transaction, but talk about a bold move that would reshape Disney for the future. That would be one of them.
Do you agree with the notion, though, that with the recessionary pressures and pressures on the stock prices at large, that some of these companies will be forced into deals? It seems like an interesting dynamic because while they may want to go away from a subscription model during a recession and to advertising is really correlated to GDP. So if we see that decline, we're also going to see that sort of revenue decline. It doesn't seem like a real good trade-off.
Melissa, you just nailed it. I mean, I think what people are missing when they're looking at the streaming, sector right now is that Netflix actually makes $6.5 billion of EBITDA. They generate positive free cash flow. They're not in a challenged position. Yes, subscriber growth has slowed. Investors have lost confidence. It's happened many times before. This is not the first. This might be more severe, but it's certainly not the first time. The real question is, think about everybody else. All of these legacy media companies that have pivoted to streaming, they are losing billions of dollars. I don't care whether we're talking about Paramount Plus or Peacock or Disney, who you just mentioned with Hulu. Like, everyone is just bleeding cash on streaming. Imagine what happens. You're bleeding on streaming, and now your core business that generates all of your cash flow, all of your free cash flow, broadcasting cable networks, sees not only greater cord cutting because of sort of the economic environment we're in, but also sees advertising turn negative. That is a nasty situation that I think is going to, the real question we're keep looking for is, when do people start to cut back marketing spend and or programming investment into streaming from all of these legacy media companies? That could be really a catalyst, actually, on the positive side for companies like Netflix. I don't think Disney will cut back either, but I do think that there's going to be some of the weaker, smaller players are going to cut back, and that's going to be a very big buying opportunity for Netflix over the course of the next 12 to 18 months.